The global pandemic has destroyed the traditional dine-in restaurant industry, and companies have been shut down for months with no clear plans to reopen anytime soon. And more than 1/3 of dine-in restaurants have shut their doors forever. But consumers will always have the desire to go out for food. And right now, the fast food industry is the safest and most convenient option. And most fast food companies are innovating and shifting their focus to drive-thrus, takeout, and delivery as the pandemic continues. So in today's video, we're discussing 3 fast food companies who have a strong online and digital presence that will allow them to continue to grow and expand even through this hard time. And analysts are predicting that with all the shutdowns of traditional dine-in restaurants, the fast food industry and delivery will be the way of the future. And before we jump into the first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and any major market news or headlines. So please hit the like button, subscribe for daily videos, and today we're going to focus on 3 fast food companies who are digitally focused, have a strong online presence that will continue to grow as the pandemic continues and as fast food becomes a more prominent way we go out to eat. And the first restaurant that we're going to go over today is Chipotle Mexican Grill. Ticker CMG, currently trades for over $1,400 per share, but remember, with fractional trading, you can buy in for as little as $1. Over the past year, the share price has grown more than 68%, and this company has seen tremendous online digital sales growth throughout the pandemic. Their current market cap is $41 billion, and over the past 5 years, the company's up more than 226%. And Chipotle is expected to generate more than $2.5 billion in digital sales for the full fiscal year of 2020. And over their latest quarterly report, their online sales grew 202% year over year and accounted for 49% of the total sales for the quarter. That's incredible. Almost half of their total sales are coming through their digital platforms. And of the total 49% of online orders, half came for delivery and the other half were for pre-orders where the customer just picked up the food at the restaurant. And Chipotle continues to expand their online network, and they just partnered with Uber Eats and Grubhub to expand their digital capabilities into Canada. And given that its current momentum has no sign of slowing down anytime soon, we're expecting the company to top more than $2.5 billion in digital sales for the full fiscal year of 2020. And if we take a look at their income statement, Chipotle has been growing revenue year over year. And if they put in around $6 billion of total revenue for the last fiscal year, that means close to 40% will be coming from digital sales, which is a great sign for this business, especially in the new climate that we're going through. And another point that I want to share regarding Chipotle that I believe will help them grow over the long term is their focus on social media. And right now, they are the leading fast food company across all social media platforms, and they continue to come out with some innovative, funny, and viral content. They have new programs and challenges that keeps their name in the loop on some of the largest and fastest growing platforms in the world. And they've taken over different platforms like TikTok, where the younger generations are spending hours every single day. So I love how this company is focused. They have a strong marketing team and are really getting the eyes of the younger generations who are going to be their customers over the next few decades. And now we're going to take a look at some analyst expectations for this company over the next few years. For the full fiscal year of 2021, we're expecting total revenue to grow 17.4% and bring in more than $7 billion for their total top line. And over the next 5 years in the future, we're expecting more than 26% per year share price growth from Chipotle. So definitely a ton of expected growth from this high-flying company. And over the next 3 to 5 years, analysts are predicting 30+% annual earnings growth. And if we take a look at the chart from where we are today, over the next 5 years in the future, the top and bottom line is expected to continue to grow and expand for many years. So Chipotle is definitely a fast-growing fast food company to take a look at right now, who has a strong online and digital presence and has seen some massive triple-digit growth in their online sales over the past few years. So definitely take a look at this company, a leader in the fast food space that I believe will grow for many years in the future. And now we're going to jump over to the second stock in today's video, which is Dominos Pizza. Ticker DPZ, currently trades around $370 per share and has grown by more than 30% on the 1-year chart. Their current market cap is $14.6 billion, and over the past 5 years, this company has performed extremely well, growing by more than 230%. They do pay out a slight dividend as well, with a current yield of 0.84%. And Domino's is a globally recognized brand. They currently operate in 90 different markets with over 17,000 stores. They have more than 6,200 stores in the United States and over 11,000 stores internationally. So they do not rely on one single market for their revenue generation, but are actually globally diversified, which is a strong sign. And Goldman Sachs, one of the leaders in the financial world, just initiated coverage on Domino's Pizza and rated this stock as a buy at this current level, which is a great sign. And if we take a look, they are focused on their digital platforms and already have cutting-edge technology for the pizza industry that is only continuing to develop and improve as time goes on. They have more than 25 million active users on their reward program, and over 70% of their US sales are coming from their digital channels. That's incredible. You can order Domino's online, on mobile, on your Apple Watch, and more than 70% of their US sales are coming through a digital platform, which is great for the world we're living in today and the future of technology. And if we take a look, year over year, Domino's continues to impress. Their total revenue each and every year surpasses the previous high and brings in just under $4 billion over the trailing 12 months. Just taking a look at their total revenue chart, you can see continuous upward momentum. And this company has seen huge earnings growth as well, with over 24% CAGR over the past 9 years. From 2012 to 2019, each and every year, their EPS continues to grow at more than 24%, which is an incredible feat to achieve. And if we look at their current dividend, it is small, only at 0.84%, but it only makes up 25% of their total net income, so it's a very minimal portion, and they still have a ton of money to reinvest in future technology and grow the business. As well, that tiny payment that you're starting out with continues to grow and compound at a massive rate, and their 5-year dividend growth rate is at over 20%. So although your starting yield is on the low side, I understand that dividend amount that you're collecting each and every year is compounding at a very fast rate. And of course, a majority of your returns from Domino's is going to come in the form of share price appreciation, which has performed very well over the past few years. And finally, analysts are predicting 15% per year growth in this company over the next 5 years in the future. And right now, over the shorter term, the company is rated as a buy, and the current price target sits at $430 per share, so a lot of upside from where we are today at that $370 mark. So this company is one of the leaders in the pizza industry. Pizza is a staple in American and international diets. It's one of the best fast food delivery options on the market, and Domino's operates in almost every market across the United States and internationally and is a leader in that space. They continue to reinvest back in technology. A large majority of their shares are already through their digital channels, and I believe as the pandemic and our new transition in society continues, the digital aspect for this business will only continue to grow and expand. So definitely take a look at DPC if you want a fast-growing fast food company focused on digital growth and development. And now we're going to jump over to the third fast food company in today's video, and that is Wingstop. Ticker WING currently trades around $150 per share and has grown 65% over the past year. Their current market cap is only $4.5 billion, so they are a smaller company, and they do have a tiny dividend of 0.36%. And over the past 5 years, the share price has accelerated more than 533% and has performed extremely well. And this company continues to grow. They have more than 1,300 locations in 10 different global markets. And the company has a strong track record of more than 16 straight years of growing same-store sales growth, which is a very important feat for a fast food company. And if we jump over to their income statement, year over year, their total revenue continues to grow. Although this is a smaller cap business, you can see every single year, their total top line continues to reach record highs. Their revenue is on an upward exponential rate, and I love to see that for this business. And if we take a look, they are digitally focused. And in their investor presentation, they say digital is our business. They understand that that is the future, and that's where they want to be, and that's how they position their entire business model. They want to be the most efficient way to place an order. It is injected straight into their point of sale system. And on average, people spend $5 more when they order online. And their stated mission, the company has come out and announced that they want to be 100% digital over the next few years. And if we take a look right now, 40% of their business is currently digital and delivery, and they like to see each and every year that growth continue over time to eventually become 100% digitally focused and be a 100% digital business over the next few years in the future. And I absolutely believe they can achieve that. I think they won't hit 100 right away, but I'm expecting over the next 3 to 5 years, they can approach that 50 to 80% mark as time goes on. And one thing that's very important, like all three of the companies we've taken a look at today, you can access Wingstop anywhere. Mobile app, social media, website, delivery options, and they're taking away every obstacle that would prevent you from ordering their food, and that's exactly what we want to see. And they continue to innovate like all of the companies we've gone through already. They have different pickup locations, different ordering kiosks, and they're actually focused on voice activation, which a ton of tech companies are transitioning and do believe the future of their growth is going to come from voice activated devices. And analysts are predicting massive future growth from Wingstop going forward. Over the next 3 years, the forecasted annual earnings growth is at 20%. And going forward over the next 3 years in the future, the top and bottom line is expected to continue to grow each and every year, reaching record highs over the next 3-year span. And if we take a look, they do pay out a slight dividend, which is only 0.36% and makes up around 46% of their total net income. But we have to take a closer look at their dividend history. And over their latest earnings, the company announced a $5 per share special dividend. So although the current yield is tiny, the company has a strong history of reporting and paying out investors a special dividend payment. And if we take a look, you can see 3 massive spikes in their total quarterly payment over the past few years. So each and every year, back in 2018, 19, and 2020, they reward investors with a one-time massive special payment. So you can see as time goes on, their actual dividend paid is tiny, but it continues to grow year over year like a normal dividend growth company. But every year they reward investors with one giant special dividend as time goes on when they have the excess cash. So if you want to buy into a company, but you have to focus on dividend as well because you like that income, just understand that although the current quarterly yield is on the low side, they have a strong history of rewarding investors with lump sum special dividends every few years. And you can see as time goes on, their share price has continued to grow as well. So another interesting company, a smaller cap fast food name that doesn't really get talked about too much. They have performed extremely well over the past 5 years, and I like their business. They have a strong focus on going 100% digital, which I believe is going to lead to higher margins and over the long term can make this a sustainable brand. So the fast food industry has seen a huge acceleration because of the pandemic. They really lost a lot of their competitors when dine-in restaurants were forced to shut down. So I think as time goes on, until we are really 100% out of this pandemic, I think fast food over the next 3 years is still going to be a dominant player in our lives. And I think the new innovation coming from these 3 names and many more are going to lead them even higher and even larger than where they are today. So definitely take a look at some of the more innovative fast food companies. Of course, I didn't talk about a McDonald's, a Wendy's, or a Starbucks in today's videos. Those companies are already so large, already so well established, and really their innovation isn't coming in as fast as the 3 we took a look at today. So thanks for watching and see you in tomorrow's episode.